VYM is Vanguard's dividend-yield-oriented ETF. VOO and VTI are their broad market index funds for the S&P 500 and total US stock market. Let's compare them. We can compare VYM to both VOO and VTI at the same time, as both VOO and VTI capture the market in the US and perform nearly identically. VOO is the S&P 500 and VTI is the total US stock market. I delved into comparing these two funds here. You're interested. VYM, established in 2006, is a narrower segment of the market. It's the Vanguard High Dividend Yield ETF. It has about 400 holdings. As the name suggests, the fund holds large cap US stocks with a high dividend yield. Specifically, the fund seeks to track the FTSE High Dividend Yield Index. This index is market cap weighted and attempts to forecast dividend yield. REITs are excluded. Stocks forecasted to have no dividend yield or that haven't paid a dividend in the past 12 months are also excluded. Sector weightings are naturally very different for VYM than for VOO or VTI. Thus, VYM alone would not be sufficient as a core holding for a diversified investment portfolio and should probably only be used to tilt or overweight high dividend stocks in one's portfolio. This may be attractive for dividend investors. I'm not one, but I did design a dividend-focused portfolio that incorporates VYM that I'll provide a link to in the description. I also did a video on it here. VOO is the Vanguard S&P 500 ETF. Established in 2010, it is one of the most popular ETFs out there. The fund seeks to track the S&P 500 index, holding over 500 US large cap stocks weighted by market capitalization. This index is considered a barometer for the US stock market. VOO or VOO is roughly half large cap value and half large cap growth. As such, it is more diversified than VYM. VTI is the Vanguard Total Stock Market ETF, which just means the total US stock market. It was established in 2001. VTI provides similar broad exposure to the US stock market, but also includes small and mid cap stocks. Specifically, VTI is about 82% large cap stocks by weight, followed by 12% mid caps and 6% small caps. The fund seeks to track the CRSP US Total Market Index. This ETF has over 3,500 holdings. Consequently, VTI can be considered more diversified than VOO. All three of these funds only hold stocks in the United States. Both VOO and VTI include REITs, while VYM does not. Going back to 2006, when VYM was incepted, VOO and VTI have beaten it handily. In fairness, we should expect this result, as VYM inherently has much more exposure to the value factor, and the value premium has suffered over the past decade. Though all three of these funds are highly liquid and very popular, Vanguard's VOO and VTI are much more popular than VYM, with over $550 billion and $900 billion in assets respectively, compared to about $33 billion for VYM. VYM has an expense ratio of 0.06% or 6 basis points, while both VOO and VTI are cheaper with an expense ratio of half that at 0.03% or 3 basis points. In conclusion, investors seeking broad diversified exposure to the US stock market should use VOO or VTI as a core holding. VYM only looks at large cap high dividend yield stocks in the US and is thus likely better suited as a dividend tilt for those looking to use dividend yield as income or those who want a suboptimal naive value factor tilt. VOO and VTI have outperformed VYM going back to VYM's inception in 2006, as VYM has little exposure to growth, which has beaten value over that time period, highlighting the importance of diversification across equity styles. VOO and VTI are also more popular and slightly cheaper than VYM. What do you think of these three ETFs from Vanguard? Let me know in the comments. Thanks for watching. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.